Good morning, everyone, and welcome to the European crossover webinar. And let's go and pull up the euro. We have seen the euro going to make this push even lower, but we were looking for lower prices since Sunday. Really, it's tied to the coronavirus lockdown. You're seeing the same thing. I saw that they're going to announce, Boris Johnson will be announcing later on some new lockdowns. We can take a look at the cable. Certainly seen a pretty good fall there too. I think that may have come into support. I know that the euro did also. Even with the Australian dollar, you see here, that's what we were looking at. Take a look at the cash dollar index, which really is simply benefiting from and it's just now made it to the breakout area that we were looking at for yesterday, which is 93.89. It's just simply a beneficiary of the euro selling off because the euro trades inverse to the dollar index. The dollar index has not done anything throughout this entire fall in the U.S. equities until yesterday. And yesterday was simply a byproduct of the euro paring back. It's simple. I mean, it has nothing to do with any rush to the dollar, any safety trade at all whatsoever. Speaking of which, we have seen the equities come back here. You can see here, I've got this on 5 minute and 30 minute just to highlight. I've got the shorter time frame on a separate page, but you can see here we've had a pretty good run. We broke this trend line, really took this in Asia, and then we finally quieted and started to come back. And you can see here we came down here to this 10.894, or we actually didn't get quite there, but that was actually may have made that, didn't even realize it. So yeah, 10.897, that was a good area right there. And actually an area that I had pinned in, I wasn't paying much attention to go on and jump back in it if we saw that. You can see that. So certainly we're responding today with this move. We'll take a look at the economic activity. UK CBI trends looking for a minus 40. That comes up at 6 a.m. Eastern. And then we do have existing home sales not until 10 a.m. Eastern. And then Richmond Fed Index, which is a third tier piece of data, and that's going to be at 10 a.m. Eastern. At 10 a.m. Eastern, we are going to get Eurozone consumer confidence flash number. That may cause a little bit of movement. Keep an eye on that. That's going to be 10 a.m. Eastern. But you can see we've already had a nice little rebound here from that area. And we had 10.894. The low was 10.897. And decent little rebound here. 5 minute chart. That actually retraced, I just saw that right now, to the 38% to the T. Let's go and move into the analysis. Actually, we'll cover the stories quickly. Australian dollar slips on RBA speech and Kiwi eyes rate decision. The Australian dollar reversed early gains on Tuesday after a senior central banker flagged the prospect of policy options, including currency market intervention and negative interest rates. The Australian dollar was last down 0.2 to 72.07 from a high of 72.36 before the closely watched speech by RBA Deputy Governor Guy Debelle. Debelle listed a number of policy options the RBA board was assessing to meet its employment and inflation objectives. Foreign exchange intervention was also being considered, although Debelle said it was not clear whether this would be effective given the Aussie dollar was aligned with fundamentals. The Aussie is up 3% so far this year and helped by stronger prices for its top export iron ore and comparatively low coronavirus infections. Some Australian states and territories have virtually eliminated the virus, while others are seeing cases in low single digits. Only Victoria is a hard lockdown after a surge of cases since July, but it's now showing a rapid slowdown in new infections. A week of greenback has also helped prop up the risk-sensitive currency. That said, low exchange rate would definitely be beneficial for the Australian economy, so we'll continue to watch developments in the foreign exchange market carefully. Across the Tasman Sea, the New Zealand dollar was down 1/10 at 66.66 ahead of a policy decision by the country's central bank on Wednesday. The Reserve Bank of New Zealand will leave its official cash rate at record lows and hold off on further stimulus on signs the fallout from coronavirus pandemic could be milder than expected. And sterling falls to a 2-month low ahead of the UK restrictions. The pound slipped to a 2-month low against the dollar on Tuesday ahead of a fresh set of mobility restrictions to be imposed by British Prime Minister Boris Johnson to tackle the second wave of the coronavirus outbreak. Sterling fell to 27.51 against the dollar, the lowest level since July 24th, while the pound was down a 0.25% against the European common currency at 92 pence. Johnson will tell people on Tuesday to work from home and announce new curbs on plants, bars, and restaurants, stopping some way short of a full national lockdown of the sort imposed in March. Assuming the 2-week lockdown is avoided, the markets may show signs of relief given there's some time for a strong assumption that full lockdown like in March, May would be avoided. And then lastly, the buoyant dollar holds near a 6-week high as the stock sell-off subsides. A resurgent dollar held onto sharp gains on Tuesday after virus fears and worries of delays in fresh U.S. stimulus drove a wave of selling in just about every other asset market. A public holiday in Japan kept moves in Asia modest, and calmer trade in equity markets also took some of the pressure off riskier assets. Investors also looking to the London Open for their next cues. The Federal Reserve Chair Jerome Powell with appearance on with Treasury Secretary Mnuchin at a congressional committee is also on the radar. Against a basket of 6 major currencies, the dollar held at 93.51, just below a 6-week high hit on Monday. The Japanese yen, which fell to a 6-month peak as greenback gains gathered pace, and it edged up to 4.57. And the Aussie dollar recovered from a dip when a senior central banker mentioned negative rates. There's a flight to safety to the greenback and bonds from the self-inequity, which is a bunch of BS. That's all BS. This has to do with the euro paring back. It has nothing to do with the thing. Look, when the market was falling down, why wasn't the dollar rallying at that point? The euro started selling off. Did the announced Silver Sunday, the euro opened up Asia, actually up, I think it was 20-some pips. When the euro, by the time we came into the New York session, I think we were already off 100 pips. That's what drove it. It had nothing to do with equities. Sentiment will remain weak. Powell fails to break the congressional deadlock to another round of stimulus. Futures paint a mixed picture with tiny gains in Europe and small declines in the U.S. Investors worried that rising COVID-19 cases in Europe and ebbing enthusiasm for fiscal stimulus in the U.S. as election campaign dominates politics. The euro was held at 118 and then 17.68, while sterling was fragile at 28.22. Japanese currency has been among the best performing majors this month. It's not uncommon with sudden yen moves that it's driven domestic asset managers coming in to buy foreign assets at the low and buying dollars to pay for them, said Stuart Oakley. But I don't really know what's behind this particular bounce. My own personal view is it's just a correction within a major trend for stronger asset prices in the US and a weaker dollar with the uber easy monetary policy from the overwhelming driver of everything. With that, we'll move into the analysis. And that was the breakout area for yesterday, 93.89. And you can see we ran out of gas. We're right there at 93.89. So we still haven't broken out, although the buy chart resistance for today is actually higher. So getting there doesn't do anything yet. We would have to get above 94.01, but we'll get to that. So the year paired back as lockdown appears ready to be imposed. Support on Tuesday will be 1714 with resistance at 1813. And so far the low today has been looks like about 1718 or so. I can pull this in here. 1719, maybe 1718. So today's low is 1714, bias chart resistance. And it's 1813. And we will need to shift this to bearish in the short haul. Overall, it's still bullish, but in the short haul, there's no doubting that we're starting to turn lower here. We'll move on now to the cable. Monday, cable dipped on Monday, closing at 5-day lows. Support on Tuesday will be 27.45 with resistance at 28.78. Well, you can see we've already dipped past even 27.45. Probably could have moved it just right there, which you can see right here, that open here would have been support. Although I thought we would probably have held that. So it'd just be right there, which would be 27.23. It's still got below that, but we'll go with the 27.23 if they were to dip back. Same thing here. Things have turned bearish. And resistance. $28.78. You can see that right up here. Onto the Aussie dollar. The Aussie slid back to start the week. Support on Tuesday will be 71.59 with resistance at 72.63. We'd have to get below 71.59 to say we're bearish. We're rotating lower, but we're still not. You can't really say we're bearish. We're just rotating lower here. So overall, still bullish. Let's go into the QE. So the QE closed at 5-day lows on Monday. Support on Tuesday will be 66.01. Or 67.10 being resistance. And on to the dollar CAD. The dollar CAD saw a solid advance on the day, aided by the sell-off in commodities. Resistance on Tuesday will be 33.34, followed by 33.79. Support will be 32.37. The dollar peso saw a big follow-up surge from Friday's turnaround. The pair skyrocketed to 21.55, cleaning out medium-term stops. Resistance on Tuesday will be 21.44 with support at 21.21. Dalian posted a hammer on Monday, suggesting we have at least a short bottom in place. Support on Tuesday will be 425 with resistance at 495, followed by 517. The dollar index posted a solid rebound on Monday, coming up short of the chart resistance at 93.81, which would be the breakout area on the closing basis. Resistance will be 94.01 with support at 93.06. On the Kiwi yen, you can see we came down here to the 69.54 area here, just a hair below that. You see right there, 69.46 is going to be support. And resistance will be this level right there, which will be 70 cents even. We're going to have to establish a close below here before we can say we've turned bearish on this. Euro yen is breaking lower here. We had 22.80. We've actually dipped even below that. Support is actually going to come in right there. You see across these bars right there, which would be 22.23. And we can say that's gone bearish. Resistance would be right just below the 24.01, which would be 23.79. Onto the Euro, which started to turn things around. Resistance is 63.40. And support is going to be right there. 62.27. Euro Kiwi. It's still going to remain bearish, but we started to turn things around with a solid rebound. Resistance is going to be right there. 77 15. Support right there. 75.60. On to the ASEAN. This has turned bearish. Support's going to be 74.84. With resistance right there, which would be 75.91. Onto the guppy. Definitely bearish. It's really pushed all the way down here. This would be support here, which is just about get to it, 32.97. Been one heck of a fall. On the upside, resistance can be right there. These level touches, 34.67. And lastly, starting odd. Upside would be right there, this underbelly, which is going to be 78.95. Still going to remain bearish. We need to get a close above right there, daily close above 78, basically 78.25 falling stage on a short-term basis, bullish. Support is going to be right there, 76.45. And that's going to do it for FX. And you can see here we've made this quick run up here to the 11,000, almost 11,020 area. See a little bit of a slight pullback after a quick run. And I'll get the bias chart posted. We'll see you in the chat room. And thanks for joining us here on the European Crossover webinar.